Hi everyone, this is me, RT, and welcome to the Gecko Finance channel. Today, I got a story for you. A story of David and Goliath. A story of corporate greed versus common people. Wall Street versus memes and gamers. Today, I will tell you a story of beef between Reddit and Wall Street. Buckle up, real good, and let's go. Last year has been particularly crazy, and I think it's only fitting what happened. And what happened was that Reddit actually managed to take down Wall Street Live. And this might not end up in history books, but I think we can say that this is the first economic flash mob that ever took place. Okay, so let me explain what happened. There is a store chain called GameStop. You might have heard of it. It was pretty popular 2,000 years ago when people actually went shopping offline and bought analog copies of everything. So GameStop deals in selling discs with games and consoles, anime, babes, figures, that some of you might enjoy. I don't know, whatever floats your boat. Things haven't been too good from GameStop recently, because of whole pandemic situation. People are too afraid to leave their houses and die immediately. It's been longer than that. GameStop has been dying since 2015, and some folks might say that it was time to press F to pay respects. But it didn't quite turn out that way. So GameStop hasn't been feeling too good, and their sales dropped by 40%, and their share price hit rock bottom, $4 a piece. If you play short, it's Christmas time, buddy. I think it's time for me to explain what short is. So a short sale is when a trader assumes that the prices of particular shares will drop in the near future. What a trader does is he borrows some shares from a trader and sells them. And let's say he gets 100 bucks. Then, when the prices of shares do drop down, he buys them back for cheap. And then he returns them to the trader. And the profit he makes depends on how fast he is and how epic the fall was. This is a disclaimer, and that is really important to note. If you're only starting to trade, it's a really bad idea to play for short, because if you fail, you're gonna lose a lot of money. So you just stick to bread and butter, don't get into all that nonsense. Let's get back to GameStop. GameStop shares were permanently shorted. Actually, 140% of company shares were sold on short position. And that's kind of perplexing, because how can you short more than the company has? Those shares were sold over and over again. And that's how, traders make money of dying companies. They short sale and then short sale again and again and again. And that's how they make their profits. It looked like GameStop was going down, but some memers, some dank memers from Reddit took a note and they decided, okay, boomer, you're going down. You're going down hard. Suddenly, last year, some good news started to appear about GameStop, because of which quotes crept up. First of all, the director of Nintendo America, Reggie Fils-Aimé, was included into board of directors. And 10% of the company was bought by Ryan Cohen, founder of a successful online pet store. And they began to discuss how the current business strategy could be changed. All of that made Wall Street short sellers nervous, because if the stock prices rise up, they will have to pay in full and they will lose all their income. And here comes the Reddit community called Wall Street Beefs, where online traders shared stories of their success, failures, and how to get rich in general. Last fall, Redditors began buying options on GameStop shares in hopes of making money. And all of that was done under slogans of saving gaming community and punishing corporate pariahs and hedge funds. And the more options they bought, the more value of the stock increased. And hedge funds found themselves in a very uncomfortable position when they had to buy their stocks back and return them to minimize their losses from short sales and rising broker fees. The drain of their assets contributed to the growth of quotations, and Wall Street Beef's community has been flooded with memes for pushing GameStop stocks into space like Elon Musk, but we'll come back to that later. Since the beginning of January, stock prices have been rising from $20 a piece to $40 a piece, from $40 a piece to $75 a piece, and from $75 a piece to $150 a piece. Wow! Hedge fund Melvin Capital was forced to raise $3 billion in injections to stabilize situations, and losses from short positions reached $5 billion at the time. Remember me mentioning Elon Musk? And that's when he joins the party with this tweet, and after the tweet, the situation blows up. Shares rise up to $360 a piece, from $4 to $360. That's insane. And then Redditors made similar forays into AMC, Nokia, and BlackBerry, and their quotes are growing by tens and hundreds %. Total loss of the market for short positions is now estimated at $70 billion. At the height of this hysteria, popular online trading service Robinhood blocked users from buying stocks of GameStop, AMC, Nokia, and BlackBerry, and hedge funds asked authorities to interfere and stop all that madness because they wanted to protect interests of corporations. But people of the internet were not happy. So what they did was they brought rating of Robinhood down to the ground on Google App Store. And also some private investors started a class action lawsuit against Robinhood, and they pointed out that those restrictions were illegal and that they were made in order to manipulate the market to save the profits of big guys in the Wall Street offices. Well, you know, screw them. Reddit CEO Steve Huffman called the situation a Wall Street culture war against everyone else. Thanks to this flash mob, the guy who initiated the raid, who goes under the name of Deep Value, turned $750,000 into $48 million. He did not sell the shares even after Robinhood blocked the possibility of buying them, as to encourage others not to give up. We have a war to win. Yay! One for all and all for one. Let's bring them down to the ground. I think I know what you're thinking. Oh, well, I need to join the party. Yeah, I'll get rich. Ooh, I'll make some gold. Oh, yes, it's time to make that money. It's time to make that money right now. I hate to disappoint you, but as soon as the participants start to merge assets, stock price will drop back to December's $20 a piece, and all the profit will disappear. There's one important lesson to learn in all of that. Quotes are influenced by many factors. So if you are willing to invest only the money that you are willing to lose, because no one knows how market will behave in the future. If you found this story interesting at all, please don't forget to leave a like. If you did not like the story, or if you are a Wall Street executive, don't forget to leave a dislike. I'll be happy either way. Don't forget to subscribe, click on the bell, alright? And don't forget to comment on your experience with Reddit and Wall Street and investing. I read those comments very thoroughly because I like you and I appreciate you guys. And I hope to see you next time. Take care, eat healthy, till next time. Bye bye.